Do you want to know how you can make up to $500 monthly in the real estate in a passive income by doing nothing? Let's check into this just after this. Hey, this is Komal Acharya. Welcome to my channel Discovery Florida. I'm a local real estate agent. If you want to know more about the South Florida, like living, eating, or vacationing here, you are at the perfect spot. Or you just want to know about the real estate, then also don't forget to subscribe this channel below and hit this bell button. You must have guessed where this episode is heading to. When passive income and the real estate comes together, then it is a discussion about the rental income. Today on this episode, we will dive into one extra income stream you can add by doing nothing extra. But yes, of course, we are here talking about the investment. So investment is basically if you leverage your money wisely, which can get you passive income easily monthly. Stay on this episode till the end. I'm going to show you the real-time example of the South Florida deal we just closed for our investor. And that way you can know exactly like what amount you need to invest to get the what percentage of the profit in the South Florida market. By the way, it is so unfortunate that we are living in very fragile world where we don't know even if we will be alive tomorrow or not. Just 3 to 4 months ago, we did not experience this much uncertainty of life this closely. In this much uncertainty time, now one stream income is not enough, especially for the family, when we don't know what's going to happen tomorrow. When Warren Buffett says you should have multi-line income stream always to protect your family. So something goes wrong, the things you cannot control, then other things are bringing the money to you. Of course, there are multiple ways to invest money, but one of the safest and long-term benefited way it is investing in rentals. When rental discussion comes, there are some terms you need to understand. So we will go through some specific terms you will be listening when we're discussing about the rentals. Number one term is ROI. It is called the return of investment. This is a very common term when you utilize when you're calculating about the profit. So normally about 6% is considered a good ROI in the rental. But of course, higher gives you excellent ROI. That's like a baseline. On average, rental properties in the South Florida can get you easily between 7 to 9%. And I have seen people making money even 15% of the rental income. We will learn to calculate this ROI in the later part of the video. So make sure you stay till the end. There is one more term or avenue is considered as an income when you talk about the rental. It is an appreciation. Mostly properties located in a good neighborhoods in the South Florida get appreciated between 3 to 4% easily. If the market is good, I have seen even better appreciation every year. And this is like extra bonus. So normally I advise people not to count this when you're calculating because this is something you are putting in your pocket eventually as time goes. For example, we bought a rental property actually 2 years ago for about $80,000. We put some cash in right away and remodeled the property and made it a little more up to date. So immediately my property value increased up to like $120,000. So that's called the equity in the house. So that's immediately I got in my property because that was one of the good deal I got. And that's why, later in this part of the video, I'm going to explain why purchase price is very important when you're buying the rentals. In this 2 years time frame, now the property value is between 150 to 160 easily. So that's the appreciation I have collected in that property. Now let's find out how you can buy your first rental. The cheapest way And the easiest way to buy a rental is you're buying your first home with advanced planning of the rental strategy. Many times I've heard from my buyers that I'm not ready to buy a house because I want this much list in the property, so I'm not ready to invest this higher amount of money at this moment. Listen, of course the dream house has a lot of dream attached, right? That's why it's called a dream house. But remember, here we are talking about the real estate. I am not talking about dream home. Think ahead and plan strategically. You can get even your first home in 3 to 5% down payment, which is very, very low. You don't have to have thousands of money in your bank account to buy your first property. You may end up paying even the same amount what you're paying in your rent. I have seen many times the mortgage comes even lower than the rent if you are putting a little bit more down payment. Try to understand, here your strategy is to save rent, which you are happily actually giving away to your landlord, who is making a profit on your money. Check this calculation. If you're average paying around $1,400 for 12 months, how much you are losing money and you are permanently actually giving away from your pocket. Remember, you may not find everything in your first property. That's the number one thing you need to keep reminding yourself. But always keep in mind, you need to buy with the investor glasses on, not the homeowner glasses on. You can live there for a couple of years, update your property, enjoy your update in that property while living there. Once you are ready to buy a big home, then rent it out. That's very simple. It is not as scary as you think. I have worked with hundreds of buyers. Trust me, the first trigger is always difficult to do. Even for me, it was difficult when I was buying my first home. But when I got the knowledge about the real estate, then I understand it's not as difficult and you need to think as an investment. And another thing, when you're buying your own home, you can lock your interest rate even between 2.5 to 3.5% in today's market. In COVID-19, interest rates are making records and you can take advantage of that. And that brings down your monthly mortgage rate. When you're buying an investment property, then the criteria changes. It's more strict than you're buying your own home. You need to put minimum 20% down, and sometimes even it requires 30% down. So you need to have certain amount of money when you're investing. Mostly the federal loan programs require minimum of 2 years landlord history. But we have some specific programs also where there is no need to check your income or no need to check your credit score. So there is no specific requirement. It's just based on the property, like what kind of property you are buying. And bank gives you money depending on that. One of the example which I'm going to share, my investor locked the interest rate actually below 3%. Do you believe it? Mostly the investment loan, the interest rate is running easily between 4.5 to even sometimes 6.5 to 7%. Sometimes I have heard people question about why do we buy something with the so high interest rate and invest in? Why do we have to do that? Remember, this is the leverage you are taking off your down payment. Even though let's say you make less than 6% in your ROI, still you are not at loss. If that money is sitting in your bank account, how much you are making? Think about it. Is the bank giving you return around 6%? Or even higher or lower? And yes, you are paying towards your mortgage. Remember that, because that's not something you are giving away. Rental is a long-term strategy. As long as you are breaking even, you are still on the correct path. But of course, goal should be making the highest amount of money in the rental. And that's why when we buy for our investors, sometimes it takes even 2 to 3 months to buy one property, because we try to buy something in the good deal. Later in this part of the video, I will walk you through what you can get if you invest in Florida and how our investors are making even higher than 9% or sometimes higher than 11 or 12%. Now let's understand how we calculate ROI. There are different ways to calculate this. So here in this particular video, we are going to just discuss about what is a common way to calculate the ROI. So ROI is equal to gain from your investment minus cost of your investment. So basically you are calculating your profit, and in the cost of your investment has a lot of numbers, not just the purchase price. So let's discuss about the specific terms which you may need to know when you're buying a rental property. So number one is purchase price. So this is very, very important, which you can actually control when you are buying any property. Market rate, you cannot control. Market condition, you cannot control. But the purchase price you can still control. More lower than the market value you get, you can have a wide spread of ROI. Normally, for our investor, we evaluate the property based on their cash availability. We try to buy a rundown property which will immediately appraise, as I gave you in an example, and so that's the immediate equity you have in that property. By the way, finding a deal is not a piece of cake nowadays. Trust me on this. Days are gone when flash of the second you see a lot of deals on the screen. But nowadays you do have to find the desperate sellers. That gives you the good deal. Number second term is the maintenance. So maintenance has a lot of things inside, like a property tax, HOA, insurance, and huge repairs. It's rarely, normally, if you are buying with a strategy, it normally comes, but still you need to count it. And also the regular management, property management costs. So this is your all monthly expenses you calculate, and whatever you save, that's your profit. Of course, this is one general formula. It has many hidden numbers we have to go through. And what if you are taking out a loan? Then there is a different calculation for this. I'm going to go through again this ROI calculation in a separate video, so you understand if you are buying something in a cash or if you are buying something in the loan, then how much ROI will come and how much you will make in a profit. Now let's talk about the real life example of South Florida investment property in the 2020. In South Florida, you can get 2+ bedrooms from $120,000 to $230,000 easily, depending on where it's located. I'm counting here the good neighborhoods. You can still get something below $100,000 also. My strategy is always, for my investors, there's a less vacancy and also there is a less maintenance. So we need to find the good tenants. And the rent runs around between $1,200 to $2,200 monthly. Good part in South Florida is property prices are not too high, so easily can be invested. I have many long distance investors. Plus, South Florida rents are very higher than average due to low price range and the higher rents that give you the leverage to get you even 2 to 3 properties easily. Normally, I advise if you have a more amount to invest, then better to invest in a multiple small properties than just investing in the single family. That gives you decent amount of income. Also, the maintenance cost is low here because the labor is cheap. Most people are scared to invest due to the management headache. But remember, you can always leverage that. You need to think as a business person. Use professionals to manage. Use real estate agents to manage. That's why I said earlier, make profit while doing nothing. If you hire the right professional and you leverage the amount, you may make a little less profit percentage-wise, but that goes the long run. And then you won't have extra headaches. If you have a full-time job or if you have a full-time business, you can concentrate there. If you have any questions about the property management or if you have any questions about the deals, you comment us below or contact us. We will provide the more detailed information. By the way, check out this video we had released. It mentions about what are the main errors landlords must avoid when they buy a rental. Thank you so much for watching this video. I hope this information is helpful to you. If you have any more questions, always comment us below. And don't forget to subscribe this channel. We release a lot of videos about the real estate tips and also about the Florida. Now, I will see you in my next video.